Welcome to another edition of the SR Snodgrass podcast. I'm Lenore Seifer, the Director of Human Resources, and I'm here today with Shawn Kaciubij, a Risk Advisory Principal, as well as Kaitlyn Gasper, also from our Risk Advisory Group. Shawn, welcome. Can you tell us a little bit about yourself and give us a brief intro as to who you are and what you do at the firm?
Sure, and thanks for having us back. So I'm a Senior Vice President, shareholder at the firm, and Director of our Risk Advisory Group.
Kaitlyn, how about you?
I'm a Senior Manager within our Risk Advisory Group. I've been with the firm for a little over 9 years, primarily focused in the internal audit risk advisory services.
Well, it's great to have you both back here again today. Last time we were talking about a general overview of risk advisory and what that means to our clients and some of the services that you provide to them. And I thought today it would be great to meet again to talk a little bit more about some of those services in greater detail. So let's get started a little bit with the BSA validation. Last time, Kaitlyn, you'd given us a brief overview of the Bank Secrecy Act, BSA. Could you give us just a quick little intro into what that is and how that kind of ties in with the BSA model validation as well?
Sure. So with the Bank Secrecy Act, it covers multiple areas, as well as anti-money laundering. We're also looking at the USA Patriot Act and OFAC, which is, government list monitoring to ensure customers are not falling on any of those lists for potential suspicious activity. So with the BSA area, it's primarily focusing on the potential suspicious activity for the customer base. We are looking at that tying into the BSA models, which are the tools or softwares that are used by financial institutions to help identify potential suspicious activity. And that's done through transaction monitoring, alert generation, and other reporting functions within the model.
So when we're talking about the BSA model validations, my understanding is that, like you had mentioned, it's tying the software together and looking at that. There's got to be a lot of different softwares out there. How do you answer the bank's question of, can you help me with my particular software provider?
Sure, and that is a common question that we get when proposing or receiving a request for proposal on BSA validations. There are multiple softwares out there. We've worked with all of the major softwares. We've performed validations on them multiple times for varying asset sizes on clients and varying complexities. There are also some out there that maybe we haven't looked at yet, but that doesn't necessarily mean that we cannot validate those. Before we start any validation, we really take the time to look at the user guides from the model, as well as talking through with the BSA system administrator and potentially an individual at the model provider to kind of help us understand how the model is functioning and what capabilities there are within the model for the bank to use. So that's always our first step. We've worked with models that have been completely integrated with the core system, and then ones that maybe aren't as integrated. While data is pulling from those core systems, it's not just, some of them you kind of click a button and it takes you right to the core system. So we've worked on all different types of models, and we don't limit ourselves to one specific. And what's great about that as well is that we can kind of take things that we've seen at other institutions with that model. And a lot of times I'll go to a client and they can't find something, and we're able to say, well, it's located here, or maybe potentially think about using this, just because we see things across the industry, again, at like-sized institutions and also those that are different that may potentially help them.
So Kaitlyn, could you tell us a little bit about the client size? You mentioned, various different sizes there. And I guess also, who needs a BSA model validation too? Is it anyone who has a BSA audit done, or how does that work?
Sure. So anyone can have a BSA model. It doesn't, a lot of times it is dependent on complexity as well as asset size, but it's not limited to that. A lot of those larger institutions, you don't really know your customer base as well as, say, some of a smaller community bank, a one-branch community bank, who sees a lot of their customers coming in and out, knows their businesses, knows their families. It's a little bit easier to monitor those customers versus the larger, over $1 billion asset institutions that we perform validations for. So it's not limited, but they're oftentimes just based on the complexity, the overall cost of a BSA validation just doesn't make sense for their risk profile.
But we are seeing those a little bit more often now,
Yeah.
just with the scarcity of employees, especially with the experience of the compliance background. So a lot of the banks, they have a bank secrecy officer, but to have somebody who can actually do the tracking and tracing of these complex transactions and structuring transactions that may be going on, that's where the model comes in.
Yes.
So I'm guessing also then when there's some turnover in those key positions as well, would be a good time to consider making sure that it's all running as needed or expected, perhaps?
Sure, and the regulators are also going to make them have the model validated, whether it's every 3 years, every other year. Our larger ones are doing it every year. So we're seeing it more and more being pushed from the regulators, but it's also required to be done.
I was going to ask about the frequency there, so thanks for giving us that information as well. So when prospective clients are looking for a vendor to validate their model, what are some of the key things that they should be considering then too?
Sure. I would say there are probably 3 key areas that I would suggest looking for when selecting. One is the expert. So just knowing who's going to be validating your model. So what expertise do they have? And here at Snodgrass, we have multiple individuals that can, work on the validation. That also ties into the depths of the work that we perform. So a lot of the testing that we perform, we look at everything that they're using the model for and looking at, what's being input versus what's being output. In addition to that, we have, we typically try to take a day's worth of transactions and make sure that those are all pulling over properly based on their transaction code mapping. So the fact that we're taking that, which sometimes can be 30 to 40,000 transactions, it's really interesting because we can kind of see how things are operating as well as kind of give them a little bit of peace of mind while not 100% or eliminating any risk, but knowing that things are pulling as they should. Also to kind of just our deliverables that we're providing. So we have a very detailed report, and we're following the supervisory guidance, which was issued by the OCC and the Federal Reserve, later adopted by the FDIC. While the guidance is specific a little bit more towards interest rate risk models, it's the best guidance out there at this point for any model validation following within that model risk management practices. So we're really following that guidance and taking kind of a 10-step approach and focusing on 3 modeling core components. And that's detailed within a report where we're looking at the information component, we're looking at the processing component, as well as the outcomes. Information just being how is the data getting to the model. Processing being how is the data transformed into information that can be used for suspicious activity. And then the outcomes is just how is that then translated into reports or in BSA model validation cases, alerts generated. So taking a look at that, we provide that report, we explain it with management, and then we also take the opportunity to present that at audit committee meetings. It's important to note too, I know I touched on different models and working with those and being able to provide feedback. Within our proposals that we're providing to our clients, we put in a sample BSA validation report. We also put in some referrals within our BSA proposal, and that typically we try to find clients that are like asset size or similar complexity as well as model. So, if we have someone that's using, to throw out a name, a Verifin model, we'll try to put it into, at least 3 references from that Verifin model. And we always encourage reaching out to our references to get feedback on our validation process. And oftentimes we have clients where maybe they're starting to implement a model and they'll give us a call and say, hey, do you have anyone that's using this model that you can refer to? So even aside from that process, we've linked clients together and they've kind of bounced ideas off of each other just because they're looking at it a different perspective from us, coming in and validating it. So I think those are, some key areas is kind of just the experts that we have, our model knowledge, as well as the deliverables. And as we've talked in our other risk advisory podcasts, is we're not just leaving our clients after that. We're there to answer any questions, help you correct anything, review anything on an ongoing basis. So we work really closely with the administrator as well as model provider.
That's great to hear, and it sounds like it's a lot based on how you overall interact with clients too, and working with them as opposed to just providing an end product too.
Correct.
Being able to kind of tie them in and connect them with other clients based on different services and models and different things like that, I'm sure is an extra value added too. Shawn, could you talk a little bit more about some of those end deliverables and meeting with the audit committee and along those lines?
Yeah, and it just goes on to what we talk about being advisors for our clients, right? So, yeah, we're going to meet with the BSA officer. We're going to meet with management to go through our final validation report. But we're also meeting with the audit committee and sometimes the full board and going into detail on what that validation actually means. So sometimes what we'll see is the board will actually say, can you provide BSA training for our board members? Not all of them are enriched in the BSA area, that they want some additional training. So we're providing them not only a BSA audit, maybe we're doing the validation for them, but now we'll actually help the board and do some training so that they're more educated on the risk areas of BSA.
Are there other areas that you provide training on to clients as well too then?
Sure, there is. A lot of times it's on the compliance area side. That's where kind of expertise of the bank may be limited, and especially at the board level. So I think, they understand the risk of a banking environment, but the compliance side is a little bit more complex. So there's always areas that we provide additional training for board members as well.
And I know that it's always changing too.
It's always changing, yes. We do compliance monitoring for a lot of our clients now.
What does that look like?
Well, let me let Kaitlyn answer that.
Yeah. So for some of our clients, we mentioned how we'll, come in and either be in the internal audit or the compliance areas. Sometimes they just need an individual to come in and monitor their compliance. So what we typically do is go through and discuss where the areas of risk are that they would like us to take a look at. Risk rating those areas and determining how frequently we're going to be reviewing those throughout the year. So then say we're taking a higher risk area, such as our, HMDA or the Home Mortgage Disclosure Act, kind of looking at those loans on their LAR quarterly throughout the year. So we're not coming in and saying, that audit once a year. We're kind of monitoring it on an ongoing basis to ensure that they're complying with regulation as well as bank policy. So it's on a more frequent basis, and we're reporting to their audit committee as we would for an audit on the same frequency as quarterly or however often those meetings are held. And like I mentioned, it could be, multiple areas, just a couple areas. It's really what the bank needs. And we also have a lot of clients where they're advertising. They may run it through us for compliance, and those are sent to us on an as-needed basis. We're looking at them strictly for compliance with regulations. But we receive those, it could be sporadic. Whenever they create one, they'll send it to us. We'll send it back approving it for compliance, and then it's retained on their end. So it really varies for whatever they need us for, but we kind of try to prioritize that by risk and then perform monitoring overextended over the entire year.
So it sounds like the compliance monitoring as a whole is a very proactive way for clients to make sure that they're staying literally compliant with whatever regulations in areas that may be of higher risk or of greater concern, as opposed to waiting for that annual audit where then they find out all year long this wasn't quite done right or something had changed, and trying to retroactively correct it then. Is that kind of the thought process behind some of that? Yeah,
I would definitely agree with that. And a lot of times too, they just don't have the manpower within to perform that monitoring. So compliance monitoring should happen everywhere. In some form, it's just someone's normal job duty, day-to-day duty. In this case, maybe they don't have that individual, so we're coming in and we're performing that for them. But right, it is proactive. They're not waiting until year end to identify it and say, oh, now we have to scrub back the past year or two and see where we made issues. It's more so like, let's identify it, fix it the next quarter. So it's a lot more on the proactive side, I would say, for that.
What do those deliverables look like then too? Is that also an end report that you give to management, to the board? How does that kind of get tied up?
Yeah, so it is an end report. We try to make sure that we're not structuring it as an audit, since it is kind of an ongoing review. So the report structure is a little bit different, but still the same with the basics of introduction, scope, and then the results. We're also providing that in the same type of quarterly packet as we would for our other clients and presenting to the audit committee. It's just important to note that when we're going through and doing the compliance monitoring, we may not be doing the full audit each time. So we're not doing our program every single time. We're more so going through, have there been any procedural changes? If so, we'll go through and make sure that we address that, update our work papers, and it's primarily focused on testing. So we're looking at testing over each quarter and kind of updating those programs procedures on an annual basis and then as needed.
Then when the regulations are updated, do you get those changes involved and implemented pretty quickly too?
Yeah, that's important to us within our group, that any regulatory changes, we go through and we update our audit programs, making sure that we're testing to those regulatory changes and kind of accounting for those changes. Oftentimes we know they're in the pipeline, so it's not usually a surprise regulation. It's something we're kind of looking out for. And as Shawn mentioned in our risk advisory podcast, our compliance updates. We try to be ahead of the game, so if there's, a proposed rulemaking or an actual rule, we have those detailed, and, we're bringing those to our clients' attention to make sure we incorporate them within our audits.
Thank you, Shawn. Thank you, Kaitlyn, for joining us for another edition of the SR Snodgrass podcast series. Check us out on our website, srsnodgrass.com.